In a stunning turn of events, the Federal Reserve has held an unannounced emergency meeting with top Wall Street banks, a move that has ignited widespread speculation about a brewing liquidity crisis beneath the surface of U.S. financial markets. Sources familiar with the situation say the meeting was not routine. It was called after a sharp and unexpected spike in short-term funding demand, with banks tapping Fed liquidity facilities at levels not seen in years. While officials offered no public explanation, the urgency of the meeting tells the real story. Something is rattling the financial system. Behind closed doors, Fed officials reportedly questioned primary dealers about sudden strains in the repo market, the beating heart of the U.S. financial plumbing. When banks start hoarding cash, it can signal deeper unease about credit conditions, collateral quality, or counterparty risk. And when the Fed quietly steps in? That's when market pros start paying attention. The central bank insists this is precautionary, but nobody calls an emergency huddle unless tensions are building. What happens next could be explosive. A liquidity squeeze doesn't stay contained, it spreads. Tighter credit, rising funding costs, volatility spikes, forced selling. All the classic warning signs begin to flash in sequence. Investors are now asking the only question that matters. How will the markets react when the opening bell rings tomorrow? Will traders brush it off? Or will futures plunge as investors scramble to price in a credit shock the Fed isn't ready to name publicly? If liquidity stress is indeed bubbling under the surface, tomorrow could be the first real stress test. Not just for Wall Street, but for the entire financial system. Stay alert. Stay hedged. And pay very close attention to what the bond market tells you overnight. If you want more urgent financial breakdowns like this post, subscribe to the blog, and drop a comment with your prediction. Will tomorrow's market open green? Or will we wake up to chaos?